Here are 8 stocks for the metaverse. The first 4 are the most obvious. There's Meta Platforms, previously Facebook, NVIDIA, Unity, and Roblox. I'll touch on those briefly, and then I have 4 more plays coming up that might not be quite as obvious. Also, at the end of this video, I have an important warning for all investors in this space, so make sure to watch till the end. Most YouTube channels won't talk about valuation. When buying stocks, you have to make sure you're not overpaying to avoid losing lots of money. I'll walk you through a clear example at the end of the video. Until then, let's get into some stocks, and remember, keep valuation in mind. When investing in the metaverse megatrend, there are 3 main areas to invest in my opinion. One is in real life gear or IRL gear purchased by the user to allow access to the metaverse. 2 is software and hardware that powers the metaverse behind the scenes. And 3, companies that will partake in the metaverse. Facebook, or soon to be Meta Platforms, has the IRL or in real life gear to access the metaverse, their Oculus headsets. In fact, back in June 2021, when I was doing a portfolio review, I was talking about Facebook and how Oculus could soon contribute significant revenue to the business. To give us some context, let's play a quick clip from that video. Number 10 is Facebook, ticker FB. This one saw quite a little run over the past few months, and the one thing I really want to talk about today for Facebook is Oculus. I purchased an Oculus Quest 2 for research purposes, of course, and it is absolutely incredible. It genuinely feels like you are in a different reality, and the tech continues to impress me. I believe Oculus could eventually contribute significantly to Facebook's revenue, as they could expand into things like VR concerts, VR meetups, lifelike avatars, and much more. This article suggests that Oculus could be responsible for more than doubling Facebook's Q4 non-ads revenue. So Facebook gets 99 to 97% of its revenue from ads, but their non-advertising revenue increased 156% year over year in Q4 2020. And we can't quite pick out exactly how much of that is because of Oculus, since it's clumped in with a lot of what's called other revenue streams in Facebook's other revenue. But we can see that there's a massive move in Q4, which just happens to be the same quarter that the Oculus Quest 2 was released.
Coincidence? I think not!
Well, now we see Meta Platforms has now sold over 10 million Oculus Quest 2s since their launch in October 2020, which is absolutely crazy to think about. And back in 2019, Mark Zuckerberg has been quoted as saying that 10 million users was a key threshold before the ecosystem will just explode. Again, here we see non-ads related revenue has skyrocketed year over year, jumping 194%, but we still can't quite siphon out VR specific revenue. But guess what? Starting this quarter, Q4 2021, Facebook or Meta Platforms will completely restructure their financial reporting segment structure. Under this new structure, they will report revenue from their family of apps like WhatsApp, Messenger, Facebook, and Instagram, and their Facebook Reality Labs, or FRL. FRL will include their augmented and virtual reality related consumer hardware, software, and content. Meanwhile, the overall business continues to be an absolute cash flow machine, and the financials look amazing as always. As much as many people may not like Facebook, they're pretty much impossible to ignore when it comes to the discussion of investing in the metaverse. On top of that, in terms of valuation, they're trading at one of their lowest PEs since 2019, just 22 times earnings. If they're trading this cheap and they're bullish enough to make VR and AR a completely different financial reporting segment, then you might expect some pretty great returns in this one over the next few years. Our obvious stocks number 2 and 3 out of 8 are NVIDIA and Unity. They will help power the metaverse via hardware and software, respectively. But first, a quick word from Wealthfront, the sponsor of this portion of the video. While picking your own stocks can be so much fun, it can also be risky, which is why I want to tell you about Wealthfront. Wealthfront is an automated investing platform that uses software to build you a tailored portfolio to grow your money over the long term, or what they call effortless investing. What's cool about Wealthfront is that it tries to get to know the real you. They ask you a series of questions when you sign up to help determine your risk tolerance and then build a portfolio based on your needs. Whether it's your first portfolio or you're looking for sophisticated strategies, their automated investing can do more with your money. They offer portfolios curated to your interests, such as the new social responsibility portfolio. They also let you customize with funds in categories like tech, crypto, and green energy, and they'll even let you know if your selections aren't in line with your selected risk level. What do I mean by selected risk level? Well, if you go to their website, you'll be able to drag their risk score from 0.5 to 10 to see how they will build a portfolio from scratch for an ultra-conservative investor to a very aggressive one. To open a Wealthfront account, all you need is $500, a few minutes of your time, and they'll take care of the rest. You'll also have a 0.25% annual advisory fee on your assets, but that is where another awesome feature comes into play. Wealthfront looks for tax loss harvesting opportunities on a daily basis, which is especially helpful as the end of the year approaches. With the help of tax loss harvesting, they say 96% of their classic investment account clients have their advisory fees fully covered. And tax loss harvesting is just a fancy way of saying they sell off investments that have dropped in value and replace them with similar investments, letting you offset your capital gains tax. Additionally, if you use my link down below, you can get up to your first $5,000 managed completely free for life. So definitely check that out down below in the description, and thanks again to Wealthfront for sponsoring this portion of the video. NVIDIA, ticker NVDA, is one of the world's largest makers of AI chips and graphics. And it is for that reason that Mark Zuckerberg actually pointed out NVIDIA in Facebook's conference call, saying companies like NVIDIA that are building a lot of graphic chips are going to be really important for a lot of the content that I think is going to be increasingly graphically intense. But what Mark might not have wanted to point out was NVIDIA's Omniverse. Zuck is building what I'd probably consider the social metaverse, whereas NVIDIA, they're building the practical one, or what they call the Omniverse. This is probably the most insane thing I've ever seen. NVIDIA is able to scan real-life items and environments and create a true digital twin in the Omniverse down to the finest detail and material. That might sound kind of crazy and overboard, but you're going to want to watch this 1-minute clip of Ericsson explaining how they're utilizing the Omniverse to plan their 5G rollout and realize just how powerful use cases for the Omniverse can be.
Ericsson is building a digital twin of a whole city to configure, operate, and continuously optimize their fleet of 5G antennas and radios. This is a really great story. Take a look.
There are 15 million 5G microcells and towers planned for global deployment in the next 5 years. Ericsson is using NVIDIA Omniverse to build digital twin environments to help determine how to place and configure each of their sites for the best coverage and network performance. In Omniverse, Ericsson builds city-scale models that are physically accurate down to the materials of the buildings, vegetation, and foliage. Then, wireless network components are added, including the precise location, height, and antenna pattern of each transmitter. Ericsson built a custom Omniverse extension, enabling them to integrate radio propagation data and leverage Omniverse's RTX accelerated ray tracing to quickly visualize and calculate the quality of the signal at every point in the city. Because Omniverse materials are physically accurate, the intensity of reflections are precisely determined. Antenna beamforming and signal paths can be accurately simulated and visualized. In the simulations, the lobes signify transmitter antenna beamforming and the straight lines are signal paths. The colors of the signal paths denote strength in decibels and data throughput, from blue is the weakest to red is the strongest. Visualization is a critical capability for Ericsson. With Omniverse VR, network engineers can virtually explore any part of the model, teleporting to any location, anywhere in the world, at 1-to-1 scale. As they tune the network for optimal performance or identify path disruptions, they can literally see the effects of their adjustments in real time, things which aren't visible in real life. In Omniverse, Ericsson can perform true-to-reality remote simulation of entire 5G networks, enabling them to design more efficient and reliable networks, conduct remote field trials, and speed up deployments.
Other clients are using these digital twins to plan and optimize entire factories, plants, and much more. I highly recommend you watch NVIDIA's entire GTC November 2021 keynote when you have time. This is a Metaverse stock you cannot miss. Now circling back to Unity, ticker U, they will provide the software that will likely be used to develop and power areas of the metaverse. They help creators develop engaging, immersive, real-time entertainment that harnesses the power of 3D modeling. And what many people may not realize is that Unity is used for more than just games, such as architecture and engineering, the auto industry and transportation manufacturing, film and animation, and even education. And also, funny enough, the Unity CEO mentioned NVIDIA and their CEO Jensen Huang as a fundamentally necessary company that had to come along at some point to give us the capabilities to build the metaverse. So just a little tip of the hat there. Unity also recently finalized their acquisition of Weta Digital's VFX division for $1.625 billion. This division is responsible for some incredible films such as the Marvel franchise, much of DC, Planet of the Apes, Game of Thrones, and much more. It looks like their goal is to take the suite of tools used by Weta to develop these award-winning films themselves and distribute them to creators using Unity. However, the top comments on their Weta x Unity release video on YouTube not only call out Unity for not finishing new product releases, but they also point out how their competition, such as Unreal Engine, seems more competent, impressive, and accessible. That said, Unity still boasts a 50% game engine market share with 1.5 million active creators as of June 30th, 2020. Now, it's a bit outdated, but they're still pretty well positioned to capitalize on the metaverse. However, I must say they are not a cheap company. By that, I mean as an investor and looking at the stock, Unity is a bit too expensive for my taste, but I'm just ultra picky. If you're in for a trade, maybe Unity can continue some momentum. However, if you're a long-term investor, beware of companies who are in a hyped up space and trading at 31 times next 12 months EV to revenues, and also about 2 to 3 times the value of their next comparable companies. Valuation matters, people. Finally, the last obvious pick for the metaverse of these first 4 before we move into the second 4, which are a bit more discreet, we can say, and that would be Roblox, ticker RBLX. This is actually a stock I've covered on this channel before, so make sure to subscribe, because if you did, you would have gotten in-depth due diligence 11 months ago on Roblox. Roblox is not just one game, it's actually a platform that facilitates user-generated or user-developed games. They believe user-generated games are what will bring us into the metaverse, and mind you, this article mentioning the metaverse is from May 2020. Roblox has been ahead of the curve on this metaverse trend for a while now. They already had in-game economies with Robux, similar concepts too, but not quite NFTs, customizable avatars, and more. Back in fall 2020, they hosted a live concert in the Roblox Metaverse with Lil Nas X and his first ever performance of his new single at the time, Holiday. This concert was attended more than 33 million times. And now, just recently, they've already partnered with Nike to develop Nike's Metaverse location, Nikeland. Roblox games have literally hundreds of thousands of concurrent players, and that's because they're not just games. The most popular ones are actually destinations for social interaction, which is why they'd be a natural next step in the progression to become a destination in the metaverse. That said, Roblox from an investor standpoint is a stock that's still a bit too expensive for my taste in terms of valuation, but that doesn't mean there's not more momentum in the tank. And that's also why I have 4 other stocks for you in this video. And after those 4 stocks, again, I have that crucial warning and lesson for any new investors on why valuation matters and how it can save you from losing a bunch of money. All right, so the first of our last 4 stocks is Immersion Corporation, ticker IMMR. And I know, you may have heard of this one, but guess what? For some reason, Wall Street either hasn't or they just don't care, because it's down over 47% since the start of the year, and that's usually because maybe it was overhyped and overvalued right here. But it didn't even sustain the pop when the metaverse hype arose, and that is what makes it interesting. Immersion Corporation equips devices, cars, gaming peripherals, etc. with haptic technology. There are over 3 billion devices using their technology with over 150 licensed customers. Haptic technology relates to the transmission and understanding of information through the sense of touch. Common examples would include the notifications on your phone via vibrate mode or the rumbling of an Xbox or PlayStation controller. And speaking of which, Immersion Corp was actually behind the new Sony DualSense wireless controllers with haptic feedback for the PS5. Immersion also owns many crucial patents, such as this one for applications in AR and VR. So we already know Immersion and Sony have a business relationship. Sony's rolling out their new suite of VR headsets and peripherals, so take a look at the Striker VR peripherals that IMMR is working on, and take a look at what this guy's holding the Sony website modeling their VR. Looks pretty similar, no? Also take a look at what Zuck posted on his Instagram. This was sent to me by an investor community member with a keen eye, actually, and clearly you can tell by this caption the next step in VR hardware and peripherals is immersion via haptic feedback. The company is projected to do a reasonable 14.8% growth in 2022 according to analysts. They have a healthy balance sheet with lots of cash and cash equivalents and what looks like no debt. And because cash makes up the majority of their market cap, their next 12 months enterprise value to revenue is pretty low at 1.63. They're continuing to reduce their operating expenses as well, which expanded their profitability and margins. IMMR is actually shaping up to be a pretty interesting play. Stock number 6 out of 8 is Qualcomm, ticker QCOM. The main reason this one is on here is because of Facebook's Quest 2 VR headset, which relies on Qualcomm's Snapdragon XR2 chipset. In other words, Facebook needs them for their VR headsets. It's likely for this reason that the Qualcomm CEO called the technology, quote, the ticket to the metaverse. Perhaps this positioning in the metaverse megatrend is also why the Qualcomm CEO seems to have shrugged off their conflict with Apple, saying they'll grow without them. And aside from the metaverse, Qualcomm also presents an interesting Internet of Things or IoT play. Don't forget, just because the metaverse is here doesn't mean the other megatrends have suddenly disappeared. At a glance, I can actually consider adding Qualcomm to my portfolio. In this market environment, I believe a larger cap, highly profitable business with solid growth catalysts could be a good addition to my portfolio. And it's trading somewhat cheap compared to its peers as well when you look at them side by side. I'm going to keep looking into this one. Next is Playboy, ticker PLBY. I'm willing to bet most of you weren't expecting that, were you? Well, that is unless you've been subscribed to the channel for a while now and saw us talk about it in the low 20s. PLBY is no longer the old Playboy run by Hugh Hefner, the one that was not so great and disliked by many. It is actually rebranded to body positivity, sexual wellness, and new management from a private equity background has really embraced technology. We've talked about the companies that are building, powering, and granting access to the metaverse. This is the first company we're talking about that will be partaking in the metaverse and generating revenue as a result. Playboy recently launched their own NFTs called Rabbitars, and as far as I know, they're one of the first major corporations to do such a thing. They've already hosted private parties in Decentraland for Rabbitar holders only, other private parties in NYC, and they just recently hosted a private Rabbitar holder party at Art Basel in Miami. Now they're starting to develop a whole membership experience and ecosystem around these Rabbitar NFTs as membership passes. On the business side of things, they've generated over $10 million in revenue just from these NFTs minting and being resold on OpenSea, where they collect a royalty on each resale. Obviously, this is not my main reason for investing in PLBY, although it's becoming a significant revenue segment and it ties into the whole metaverse theme of this video. Other reasons for investing in PLBY include their OnlyFans competitor, Centerfold, which launches in December actually, their expansion in China and India, the growth of their direct-to-consumer or DTC infrastructure, and the potential for their renegotiation of licensing deals. I just figured this might be a unique Web3/Metaverse stock that might not be discussed elsewhere, and if you want more info on PLBY and the actual business thesis behind investing in the stock, you can check out any of these videos on my channel and subscribe. Our final stock here, 8 out of 8, is Matterport, ticker MTTR. I'm only going to touch on this one briefly because 1, it's probably been mentioned by some, and 2, it's so freaking expensive from a valuation standpoint. Actually, this stock is so expensive that I felt it was necessary to tell you that if you've seen a video that promises 100x and they talk about Matterport and they don't talk about their current valuation and how expensive it is, they're most likely just there for the views and not necessarily having your best interests at heart. Now, could it keep going up in the short term? Yes, of course. There's definitely momentum it could still tap into. I can't predict short-term movement, but for any long-term investors planning to hold this for a year or more, understand that Matterport is currently trading at over 40 times next 12 months enterprise value to revenues. If you don't know what this means, the higher it is, the more expensive the stock is from a valuation standpoint, and therefore the riskier the investment at that time. You want it to be lower, cheaper, and less risky. Now, for context, another company I owned called Upstart was growing revenues and profitability in the literal triple digits, like hyper growth to the max, and it was trading at near 30 times next 12 months EV to revenues at its peak. So actually, it was cheaper than Matterport right now. Needless to say, Upstart got humbled by the market and its valuation got chopped in half. And you want to see what that looks like on a stock chart? Yeah, pretty much exactly what you'd expect, and it's not pretty. Down 54% from its peak. All I can say is with this multiple for Matterport, it's either setting up for years of sideways price movement as the fundamentals catch up to the valuation, or a big fat drop in the stock at some point, in my opinion. Now, when? I don't know, because it's impossible to time the market, but it's objectively very risky to invest in Matterport right now, so just keep that in mind if you're thinking of investing. Anyways, with that over, what is Matterport? Matterport has a similar capability as NVIDIA's Omniverse, but most likely on a less granular scale. They capture 3D spaces and create digital twins and immersive 3D Spaces, yeah. Again, like Omniverse, I consider this more of a practical metaverse application than a social one like Facebook's intentions. It's truly revolutionary technology, but again, I urge you, always consider the valuation. And that's a perfect segue into the crucial lesson of today, which will hopefully save you lots of money or prevent you from losing lots of money in the long run. So pay attention. What I'm about to show you is a pretty famous chart whenever there's a new innovation or a piece of technology or something like that comes along. So in this case, we'll say this chart for demonstrative purposes represents a stock of a company that makes $100 in revenue per year. It's a metaverse stock that you found early. No one's talking about the metaverse yet. You've gone back in time. It's not unreasonable to pay $200 for a company generating $100 in revenue, right? That kind of makes sense. Then the media catches on and everyone's talking about the metaverse, and now we've come to a new paradigm, a new way of thinking or doing things to replace the old way. Everyone's on board and everyone's talking about it. And now you've just bought that same stock of a company generating $100 a year for $3,000, also known as 30 times revenue. And now, guess what happens? The hype dies down, the stock price drops, and it all goes back to the mean, aka fair value. And the company you paid $3,000 for will now be worth maybe $250 when it's all said and done. Now, don't get me wrong, there are still lots of companies to purchase and invest in today that will benefit greatly in the coming years from the metaverse. Immersion Corporation, Qualcomm, PLBY, these are just a few that I either own or really want to look into more to potentially buy. And if you're a trader, none of this really matters. But if you're a long-term investor trying to make money by holding these stocks from 1 to 3 to 5 years, there are already stocks out there that have this crazy inflated price, and they are in this red danger zone. So be careful and understand valuation matters. I just feel like I had to say this because I see a lot of 100x thumbnails going around and a lot of big promises and no one touching on valuation. And I think as financial creators and YouTubers, we should at least give you all the facts so that we can respect your hard-earned money that you're looking to invest. But again, never take advice from some random person on the internet, including me. Thanks again to Wealthfront for sponsoring their portion of this video. If you enjoy a level-headed and in-depth research approach to investing, make sure to subscribe.